Welcome to the second video of this 12-part Investing Basics series. This series is designed from taking somebody from a complete beginner in the stock market to knowing what they are doing and being able to actually get involved and start making money in the stock market themselves. So this video will continue on from the first video, in which we talked about what the stock market actually is and how stocks work, and by the end of the video hopefully you understood how you can actually make money from the stock market. And this is a progressive series, so it'll go from being very easy to gradually getting deeper into the stock market. So I do really recommend you go for the first one before and then just work your way through the video series. So if you haven't checked it out yet, I'll leave a link here up in the top right corner. So anyway, today we'll be building on from what we did last week, and we're going to dive in to try and find out how you can actually find stocks that you might want to invest in. Especially for a beginner, the stock market is a huge place, so how the heck do you know which stocks you want to go into to start off with? So I'm going to break this down today and tell you about the kind of stocks that you might want to invest in, and to introduce you to an area where you find more stable and slightly less risky and brilliant stocks to get started if you're a beginner investor. And this video is meant to just put you in the right direction, ready for the next video, where I can then lead you into actually analysing these stocks and being able to know what to do once you find these good stocks to invest in. So obviously, from last week, we know that a stock is just the stock market's representation of a public company who want to give out some of their shares for you to own part of the company. And this is your opportunity to become a shareholder in the company, and if the value of the company goes up, their share price goes up, and so does your profits. So from that, we can obviously tell that the stock market is the whole market as a whole, which brings in all of the stocks involved. And the stock market is traded on various different stock exchanges around the world. So that obviously means there's a whole bunch of stocks to look at. So how the heck do you know which ones to go for? Especially if you're a beginner and you're just not quite sure where to look. Well, many people have this question, and that's why the major public companies in the stock exchange have been segregated into these sections. This is called an index. So this is a grouping of a bunch of companies which people can look at, and it will give them a good general perspective of how the market is doing as a whole. So the most famous stock indexes are, say, the Dow 30 in the US, and this means the 30 largest public companies in the USA are all grouped in this, and these make up a massive value in comparison of the whole stock market. So generally the Dow 30, or the Dow Jones Industrial Average, is very much looked at like an average to gather a whole perspective of how the market is doing in general, meaning where all the general share prices are going of the stocks, because a whole bunch of people are putting their money into these stocks in comparison to the smaller ones. And the equivalent of this in the UK is the FTSE 100, or the Financial Times Stock Exchange 100 Index. And this is the 100 biggest stocks in the UK, all grouped together so people can look at it and they know where the biggest companies are going in terms of share prices in general. And if this is going up, generally that means the market's going up as a whole, and the same for if it's going down. So looking at the indexes initially is a brilliant way just to give you a good idea of how the market's doing in general, and these larger companies that you might want to look into, which definitely, as a beginner, larger companies are a great thing to look for. This is because they're much larger, more established, they have a great brand name, and they're very stable. They know how to run a good business. So when you invest your money into these companies, the price is going to be less volatile because there's going to be a lot more stability. People know what they're getting with these stocks, and generally, yes, there is going to be less growth involved because they're well established, and it's going to be a lot harder to grow from where they are. But in the same sense, they have a great brand name, so they're not likely to just crash out of an instant unless there's some crazy scandal goes. So if you are a beginner investor watching this video, then definitely do look at these larger stock exchanges. So in the Dow 30 Index or the S&P 500, or in the UK, you've got the FTSE 100 or the 250, which are in grouping the 350 largest companies in the UK. And these are just for the UK and the US, and there's markets all over the world. Just look for the largest index and you can easily find those, and it will find you just the largest companies to look for. And as a beginner, they're very good ones to look into. Some people also like to invest in index funds. This is practically where all these stocks in this index are grouped together, and you can buy shares in the index as a whole, which is basically an average aggregate of all these stocks at once. This makes your investment generally a lot more stable as well, because if one company does really well and another does really bad, generally they're going to even themselves out. So what you're going to get is the market average as a whole as it goes up. So what you're thinking there is probably about normally an 6 to 8% growth each year. Obviously it will vary a lot. Some years will be bad, some years will be good. But what you get is a stable investment from generally as the market as a whole when you're investing in one of these index funds. And as a matter of fact, my first investment was almost an index fund. It's an investment trust. So that's basically an index fund, but you have managers who control this investment. So they work out which stocks to buy and not. So I think that's also a good one to buy for beginners, because then you've got very knowledgeable investors already kind of doing the work for you. The only trouble is they take a small fee out of your investment, but what you do know you're going to get is stability. And that's something that's very good for a beginner, because you know you can put your money in and just kind of learn as you go from actually getting involved in the market. If you've been watching my channel at all, that's very much what I stand for. Just jump in and learn, because really that's the best way to go. You can look at books and try and understand it as much as you possibly can, but really you're never going to understand anything until you actually jump in. So this is the perfect opportunity, because if you're looking for something that's stable and you're not risking too much really by investing with this, then you can get involved and see how it all works with having a lot lower potential loss of money. And these indexes do go from the higher levels down to the lower levels as well in terms of how big these companies are. So for the UK you have the FTSE 100, which is the biggest 100 companies, and this goes all the way down through the 250 and then all the way eventually down into the FTSE AIM markets. What's AIM stand for? And the AIM, it stands for Alternative Investment Market, and this generally means you're just investing into these smaller companies with smaller market caps, which means they're almost just jumping into the market, and they're much early stage investments, which means obviously they have a much larger potential to grow, but there is more risk involved because there's less knowledge about the stock, and they have a much less well established brand name, so their business could easily be taken over by these bigger companies who are much better trusted. So obviously there's a lot more risk involved, but on the other side there's a lot better capital gain potential. So you'll see a lot more volatility of these, and I don't think that's a great thing for you beginners. So I'd say jump in with the bigger stocks and perhaps the index funds and investment trusts to begin with, because then you can jump in with less risk and gain your confidence in the stock market. Then as your confidence and knowledge grows, then you can look in these smaller companies where you have to do a lot more in-depth research to try and find out things that other people do not know, and that's where the real gains can be made. But try not to get too far ahead of yourself right now. So now that we've narrowed down a section of stocks that you might want to look for, obviously looking for the larger market cap companies to begin with. So now I want to take you through my 3 favourite examples that I might use to actually try and think of and find these stocks that are worth actually diving into and analysing a bit more. So my first tip is to look at blogs. There's some really good online sites with very knowledgeable investors who are happy to share all their information about different stocks they're looking into and why they're good ones to look into. I frequently look onto these sites just to get ideas of stocks which I haven't heard of or I might have missed before. And my favourite website for that is Motley Fool, or thefool.com in the US. And this is like a large blog site which has a massive archive of posts. They post probably about 3 or 5 times a day, all from decent investors who know what they're doing, who just give out ideas of stocks that they're looking into and good stock market knowledge. So I'll add a link to those sites down below in the comments so you can check them out to get some good ideas of what stocks you might want to look into. And also, be careful with this one slightly, but YouTube is quite good as well. I definitely value my knowledge as a stock market investor, and I do plan to just share my thoughts on different stocks and try and get a big discussion on this YouTube channel eventually of what people think on certain stocks, and just throw out my ideas and what I think would be good to invest in. So eventually I think that would be beneficial. And also there are a few good YouTube channels who do throw out good ideas. Jeremy from Financial Education, I do value his knowledge. I think he's got some good ideas. And there's plenty of others out there too. But definitely do take this with a pinch of salt. This is because anyone can post on YouTube, and not everyone really knows what they're doing with the stock market, and sometimes these people just share speculative knowledge which isn't the best idea, like particularly for beginners. Make sure you do your own research. That's super important, because when you're investing in a stock you need to know why you're buying it, and that will mean that you know what to do when you're holding it, so you know why you're investing and the reasons and why you need to sell. So this will mean that you won't make any emotional mistakes, because you'll be basing it on your head, because you know what the stock is and you know where its true value is going to go, hopefully. And then my second tip, this is probably my favourite one to find stocks. Just use your personal knowledge. Everybody has their own special field of knowledge. So if you're a builder, you'll know what tools are being used a lot more nowadays, or what machinery, or perhaps a doctor might know what medical equipment is fastly becoming useful in the field. And from that knowledge, you could look out to see, hey, this company's really showing up a lot nowadays in my field. So then you can look up and see if they're a public company on the market, and you can really dive in to try and analyse and see if it's a good stock to buy. And this is where you can really find your edge, because not everybody will have that knowledge, not everybody works in the same field. So use your own edge in your field, and this can be a great way to find up and coming stocks that most people miss. So you can jump in and buy it cheap, and when people see it really rising, the price will shoot up, and that's where real gains can be made. Then tip 3 is research tools. There are some really good sites out there where once you kind of found a stock, this is where you can do all your analysis to really understand the company and understand whether it's worth investing in or not. The best one I use is Yahoo Finance, and I'll be diving in real deep into this over the next 10 videos or so. But some sites are particularly good for filtering out, so you'll be able to find stocks by their specific sector or their size or their PE ratio, which is a really important valuation ratio, which I'll bring you into next video. So in this case, then you could search for just these specific stocks that you're wanting to buy into, and this can also be a really useful tool. My favourite website for this one is probably simplywallstreet.com. They put in a lot of effort to research into the companies, and you can often find a lot of information on there. And it's very visual, so you can get a lot of good visual representations of the stock. So this can be really helpful for a beginner, because you're just not looking at a bunch of numbers which make no clue to you. They got a few sort of bar graphs and stuff which will make things make sense a bit. So that's a good one to look into too. And this finally ties me into what I plan to teach you in the next video. And this is an absolute crucial video, so I really hope you can join me with this one. Now we've understood what the stocks are, and different ways in which you can find stocks which you might want to research into. So next video, I'm going to jump in and walk you through the first few pages of the Yahoo Finance section. So when you type into a stock that you think might be worth looking into, you're going to get up this page, and I think if you're a beginner, it's just going to look like an absolute mess. You're going to have no idea what you're looking at. There's so many different ratios and Sorry guys, I disappeared there. I got a new camera, so I'm just working my way through trying to work out how long I've got of battery on that, but the battery died, so I'm just going to finish off what I said on here. So what I was trying to say before is that next video I'm going to walk you through on Yahoo Finance and just explain all the details of what every single section means, just so you're going to have a good idea of what you're actually looking at next time. So by the end of video 3, hopefully you have a good idea of what you're actually looking at and whether actually each stock is a good one to look into to invest in. So I know this video today has probably maybe been a little bit boring. It's I haven't quite jumped into the actual numbers or diving deep into the actual investment area of this, but that'll be next video. I feel like I brought the base now, so now that we can actually jump in and start analysing these stocks. So I hope you can join me in the next video, which will probably be posted next week sometime. And if you have any questions about whatever I say in this course or anything you'd like me to clarify, please do ask in the comments below. I promise you, I am friendly, and you can ask me whatever you like. I'm happy to help, I'm here to help, so ask away.